Okay. So hi, everyone. Thank you for joining this special event brought to you by our Collier's residential team in London. We've got clients joining us from across the world today, from different time zones. So thank you very much for joining us to hear more about this special report developed by our team. My name is Tony, and I'm the Completions and Channel Manager. And today's session will be presented to you by the Deputy Chief Economist, Ollie. And we'll also be joined by the Associate Director of Collier's International Properties team, Kevin Kofter. So if you've got any questions for today's session, we've got a Q&A section and a Q&A session by the end of the presentation, and hopefully we'll have enough time to cover them all. So now over to you, Ollie.
Yeah, thank you very much for the introduction, Tony, and good morning, good afternoon, and good evening, everyone. Thanks for joining today's webinar, in which we're gonna look at a report that is about to launch early next week. So we're just gonna give you a little bit of a preview of what the report's about. So the agenda for today, just gonna quickly introduce the report. Then I'm going to talk a little bit about the research approach. So what have we done? Why have we done it? And then I'm going to dig deeper into the actual details of the report. So we analyzed various different economic, demographic, and other indicators across a variety of cities in the UK. And the goal of this research was to identify cities and potential locations that could be interesting for residential investment, but also for residential development. So I'm going to go into that in a bit more detail. And as Tony mentioned at the end, we will probably have around 15 minutes for Q&A. So don't hesitate to ask any questions. You should be able to see an icon in the toolbar that says Q&A. So you can type any questions in there throughout the presentation, and we'll try to address all of them at the end of the webinar. So in terms of the research methodology, I'm not going to go into too much detail because I don't want to bore people. But the approach that we chose was we looked at a variety of different indicators across different pillars, as we call them. So we looked at economic and demographic indicators. We also looked at property-related indicators, such as house price growth, rental yields, and so on. And we did that for a variety of cities across the UK. Now, as you can imagine, there's a lot of different data sets with different data outputs. So some data outputs will be growth rates, some will be prices, some will be percentages. So how can we then compare all of those different indicators and put them into one figure? Now, I'm not going to explain exactly how it's done, but there's a methodology called the min-max methodology. So it's just used to normalize all of the data points. And we chose that approach. Unfortunately, we didn't come up with it, but it's a very widely used approach in the industry to calculate scores. So once we had a score for each of those indicators, we averaged all of the indicators across the cities and then came up with a ranking, which we will present a little bit later. So hopefully that gives you a little bit of an idea of how we've done it. I can also say that we analyzed around 40 different data sets, and there are around 25 different data sources. So we use a lot of official data from the UK government, but then also from the Office for National Statistics. We use independent forecasts from Oxford Economics. We use land registry data. So there's a large variety of different data sets that feed into this report. Now, before we go into the detail of the report, we'd like to ask you a poll question, which should come up on your screen now. The question is, which of the following cities would you consider a prime target for residential investment? And you can see a list of 10 cities there. And if you could please choose the one that appeals to you the most, that'd be greatly appreciated. And we leave it on there for around 30 seconds. So we've got Belfast, Birmingham, Bristol, Cambridge, Edinburgh, Glasgow, Leeds, London, Manchester, and York. Right, we're just going to leave it for another 10 seconds. and then we're going to reveal the results at the end of the presentation. Don't want to give away anything too soon. Great. Thank you very much, everyone, for voting. Right. So as I mentioned before, we used a variety of different indicators, and we grouped them into 4 pillars, just to give the report a little bit of a structure and to make it easier to understand. And these are the 4 pillars. So the first one deals with economic data. So this is the potential, but also the economic health of the city. So what is GDP? What is the labor market doing? What are GDP forecasts? So all of this is quite important to pretty much all different types of groups. So to investors, but also to businesses, to employees, to the general population. The second pillar is research and development. So this deals with anything that has to do with the workforce, students, universities, and so on and so forth. So this pillar is important for potential students, but also for businesses. So if you're a high-tech business, for example, you're probably quite interested in student numbers and the educational level of your workforce. The third pillar is the livability pillar. And most of these indicators are relevant to people that live in the city or to potential people that might move to a certain city. So anything that draws people into a city as part of that. So we've got things like life satisfaction, we've got the number of leisure facilities, access to schools, access to attractions, internet connection, those kind of indicators. And then the fourth pillar is the property pillar. So anything that deals with property falls into this pillar. And I mentioned before, these could be interesting for developers, but also for investors, but also for people trying to move into a city. So we look at house prices, we look at affordability ratios, but we also look, for example, at the share of renters in a certain city. Obviously, if you have a high share of renters, as a potential investor, you might be interested in these kind of cities if you are a BTR investor. Now, the economics pillar, as I mentioned before, deals with economics and demographics, and just a couple of charts on this pillar here. So one of the things we always say at Colliers is that one of the main drivers of economic performance is demographics. And what do I mean by that? If we look at the chart on the left, I plotted population growth on the y-axis and then GDP growth on the x-axis. And what this chart shows is just a very clear correlation between the two indicators, which means that a city with high population growth is also very likely to have high GDP growth. And you can see at the top right that Edinburgh and Manchester perform pretty well. They have annual GDP growth of around 2 to 2.5% and population growth of around 1%. Now, at the other end of the chart, the bottom left, we've got cities like Newcastle and Luton. They're still growing, so there's still economic growth, which is positive, but on a smaller scale. And why is that? One of the reasons is because population growth is weaker in those cities as well. And then on the right, I just give you the chart of the top 5 cities in the economics pillar. Now, these cities will change from pillar to pillar, and this is one of the reasons why we have those 4 different pillars. It's to illustrate how certain cities do in certain indicators. And you can see Edinburgh, London, Slough, which might be a bit of a surprise, Cambridge and Bristol, they're the top 5 cities for economic performance and economic potential. Now, the second pillar deals with research and development. So a lot of the indicators that go in here have to do with student numbers and the quality of universities. Obviously, the UK is home to some of the most prestigious universities in the world. And as you can see on the right, this is reflected in the top 5 as well. We've got Cambridge and Oxford, by many seen as the 2 leading universities in the world. Then we've also got London there, which has a very large number of prestigious universities. Then Edinburgh and Manchester completing the top 5. Now, one of the interesting things that we found analyzing research and development data is the chart on the left, which analyzes the number of business births and business failures across different cities. And the chart might look a little bit complicated, but it really isn't. So the dark blue bars present the number of business startups that were created within a year, and that's adjusted for population growth. Otherwise, you could assume that London would just completely distort the chart and would be a lot higher than any other city. But we also have to consider population. So we adjusted this for population. So dark blue, business startups, the light blue bar, business failures. And why do we look at both of those indicators? It's to give you an idea of net business growth. So business births minus business failures is the number of net business births. And that's the red diamond on this chart. And you can see all but one city have actually positive net business births. Leeds is a bit of an outlier. A lot of businesses are created, but unfortunately a lot of businesses fail as well in the city. And that's why it has a negative number for net business births. I hope this makes sense. Again, if there are any questions in the end, feel free to ask. The third pillar is the livability pillar, and this deals with anything that has to do with access to schools and leisure facilities, so anything that could draw people into a city. And you can see the ranking has changed quite significantly now on the right. So whereas previously we had Edinburgh and London in the top 5, we now actually have Belfast as the top performer in livability, meaning that Belfast as a city itself is very attractive for people and for potential businesses as well. And why is that? They have a very high degree of life satisfaction. They have access to a lot of attractions within the city, so bars, restaurants, museums, theaters, and those kind of things. But they also do very well with access to schools. And another striking fact about Belfast is actually that the internet connectivity is well above the average that it is for the UK, and that's shown on the chart on the left, which just plots 2 different measures of internet connectivity. So you've got your full fiber coverage across the city, and then you've got the maximum download speed in megabytes. And you can see, with the exception of Milton Keynes, Belfast is the top performer in this category. So again, it's a slightly different indicator, and it might be interesting for different groups. So whereas the economics and R&D indicators are probably more interesting for businesses trying to relocate, the livability pillar is definitely very interesting for people that are looking to move into a city. Now the 4th pillar is the property pillar, and that covers anything that has to do with property. So we've got 6 indicators in here that you can see on the top right: house price growth, rental yield, affordability, income to rent ratio, the share of renters, and then we also included some Google mobility data, which measures the time spent at home compared to a base period, where the base period is the start of 2020, so before the pandemic hit, and how much time do people actually spend at home now compared to that. Why is that important? Because if people spend more time at home, they probably want the home to be of a certain standard. So quite important to actually include this measure. And again, if we look at the top 5 cities in this pillar, we don't see London in there, we don't see Edinburgh in there, we don't see Cambridge in there. So again, it's different cities for different indicators. Belfast, again, the top performer in this category. And they actually score pretty well across all of the 6 indicators, with the exception of the Google mobility data. We also have Sheffield in there, then Glasgow, Liverpool, and Leeds. So they're all doing pretty well across most of those indicators. One of the interesting charts in the property pillar is presented on the left. So that's the rental yield achieved. And that's based on an average flat. So it's not just broken down by overall property. This is specifically for a flat. So what's the price of the flat? What's the rental income? What's the rental yield? And you can see Newcastle outperforms everyone by quite a significant margin. So the rental yield in 2020 was around, 12%, 11.5%, 12%. Any other cities below 10%. half of the cities are below 7.5%. So again, very interesting, especially for a potential investor. What is the rental yield that could be achieved in a certain city? So those were the 4 pillars. I'm now going to briefly talk about the top 5 cities without going into too much detail, just so we have enough time at the end for Q&A. So the top performing city, don't know if anyone has guessed it, but it's actually Cambridge. So Cambridge does very well across most pillars. They actually come first in 5 of the 20 indicators that we've analyzed. So economic performance and economic potential in Cambridge is actually very positive. So unemployment is a lot lower than across most UK cities. Earnings are high. GDP growth it's not the strongest across the UK, but it's above average as well. And of course, Cambridge does very well with regards to research and development. So it's home to one of the oldest universities in the world. Cambridge University actually got more Nobel Prize winners than any other institution. I think it's 89. I checked this morning. And in terms of livability, the city is also very attractive, not just to potential students, but also to businesses. So Cambridge has a high-tech cluster of businesses in the area, thanks to its access to the university and to research. It's actually called Silicon Fen. So, as opposed to Silicon Valley in the US, it's Silicon Fen because of all the high-tech and pharmacy businesses in the area. So one example is AstraZeneca, the vaccine producer. They are based in Cambridge. So again, and this chart should give you a quick overview of why the city performs so well, but it also shows you areas where the city can improve. So things where the city can improve: affordability is an issue in Cambridge. The rental yield is not as high as in other cities. House price growth is very muted as well. But generally, the city is doing pretty well across most of those indicators. And again, we've got time for questions in the end if there's anything you want me to expand on. Now, number 2 in our ranking is Edinburgh. Again, Edinburgh does very well in all of the livability indicators. It's one of the economic powerhouses of the UK, I would say. Large exposure to financial services, similar to London. Very highly skilled workforce. The university has a very good reputation as well. And the workforce is highly educated because of that. So again, they're doing very well across most of the indicators. I think the only things that are letting Edinburgh down are affordability issues. So you will always find that in cities with a high exposure to financial services. You have a relatively small share of people that earn a lot, but you also have a relatively large share of people that don't earn as much. And that means income inequality is relatively high, despite average earnings being high too, if that makes sense. So average earnings is just what does the average person earn in the city, but then income inequality actually compares the share of the high earners to the share of the low earners. So it gives you a bit of an idea of how income is distributed. And that also leads to affordability issues. House price growth is relatively strong. House prices are high, but because you have a high share of the population on lower incomes, they can't afford to buy, so they will have to rent. So hopefully, again, this gives you a little bit of an idea of why Edinburgh is doing so well, and also a few areas of improvements. Now, the third city, or number 3 in our rankings, is Bristol. Bristol is quite interesting because they don't have a single indicators where they're doing very badly. Whereas in the other 2 examples, the cities ranked towards the bottom of some of the indicators. Bristol is actually doing fairly okay. So it's only one of 2 cities where none of the ranks is lower than 16, the other one being Cardiff. If we look at the right of this spider diagram, we can see that Bristol is doing very well across the economic and the R&D indicators. In terms of livability, Bristol is also doing reasonably well. So access to schools, access to attractions, they're all around the average. but the R&D and economic indicators, this is where Bristol really outperforms most other cities. So again, I would say it's a very balanced city across the indicators that we analyzed, with strong economic fundamentals, prestigious university, so it attracts a lot of students. Student retention rates are reasonably high as well. So it's a very livable city with a lot of economic potential. Where Bristol could improve, again, similar to Edinburgh, affordability issues, and the income to rent ratio is also not the best, which means people pay a reasonably high share of their income on rent. Number 4 in the rankings is London. It will be interesting to see the results of the poll a bit later and see how many people thought London would be number 1, which is generally what people would assume. But you can see there's quite a clear split in this spider diagram. So London is doing very well on the right-hand side of this diagram, which includes the economic and the R&D indicators. But they're not doing so well on the left side, which are the property and the livability indicators. Now, why is that? So obviously London is the financial center of Europe. There's a very high exposure to the services economy. So there's not a lot of industry or manufacturing within the city. Unemployment, on the other hand, is not as low as it is in other cities. And that's one of the reasons why if we look at Greater London, there's still areas that are not as well developed as the center, obviously. Income inequality, again, a big issue in London, similar to Edinburgh. A very small proportion of people that are earning a lot, very high proportion of people that are earning probably below average. So that's one of the downsides. And then in terms of livability, it's a bit of a two-tailed story, I'd say. If you look at all of those indicators in absolute terms, so the absolute number of schools, the absolute number of leisure facilities and attractions, London would do better than displayed here. But because we want to adjust this for population as well, London is not doing as well as other cities. So in terms of the density of schools, the density of leisure facilities, the density of attractions, if you compare to the overall population, it's actually not as high as cities like Cambridge, Bristol, and Edinburgh. And that's why those cities rank higher than London. Nonetheless, in terms of business innovation, population growth, the whole catchment area of London, its universities, the economic fundamentals, economic health, London is almost second to none. And that's why it is still in the top 5. Completing the top 5 then is Manchester. And again, the spider diagram looks quite different to all of the other ones we've seen so far. So Manchester actually has strengths and weaknesses across all of the 4 pillars. So you can see they're doing very well in the GDP component, student enrollment numbers, house price growth, access to schools. So these are in 4 different pillars. But then they're doing not so well in terms of unemployment and earnings, for example, broadband connectivity, and income to rent ratio. So now it's a lot of different indicators I'm talking about, but I think the point I want to make is that whereas London was a city of 2 tails, doing well in economics and R&D, but not doing so well in property and livability, Manchester is completely different. They've got weaknesses and strengths in each of the 4 pillars. So again, it just depends on what's most important for you as an investor or as a developer or as a business. What are the areas you want to focus on in a certain city? And looking at those indicators and those spider diagrams gives you a very quick idea of where the city is overperforming or where it might be underperforming. Now, these are the top 5. We do have a special mention of another city, and the reason for that will become clear, hopefully, in a second. So the other city we want to include is Belfast. And before I go into the detail of Belfast, if you just look at this chart, you can see Belfast is doing very well on the left-hand side of the chart, right? If we go back to London, we see the exact opposite. So London is doing very well on the right-hand side of the chart, not so well on the left-hand side. And Belfast is almost like a mirrored image of London. What does that mean? So that means that Belfast is doing very well across the property indicators and also across the livability indicators. So the city has a very high share of renters, which again would be positive for potential investors into the BTR sector. They're doing very well in terms of affordability, income to rent ratio. So the earnings are high enough to actually pay for rent, if you like, which again is quite an important indicator for a potential investor. But they're also doing very well with regards to access of schools, access to leisure facilities, broadband speed. We saw before, they're doing very well. So again, those two pillars, Belfast is outperforming pretty much every other city. That's why they ranked #1 in those two pillars. However, there are obviously indicators in which Belfast could improve, and they're all displayed on the right-hand side of the spider diagram. So in terms of economic health and economic potential, there's a lot of improvement for Belfast. We've seen other cities that are doing a lot better, where GDP growth is expected to be a lot stronger, where unemployment is lower, and where the population is generally higher as well. Obviously, Belfast is a pretty compact city. The catchment area is reasonably low compared to other cities. If you're in the middle of England, for example, within an hour drive time, you reach, I don't know how many other cities. Whereas if you're in Belfast, there's only limited scope for that. In terms of the R&D pillar, again, Belfast is underperforming, not doing as well as other cities. And that's due to, reasonably low student numbers compared to other cities. The number of business startups is lower, and the average level of qualification within the workforce is also lower than across the other cities that we've analyzed. But again, it just shows that different cities have different attributes. There are different indicators where cities perform well in and where cities perform not as well in. And it just depends on which indicators are most important to an individual or to a business. If you're very focused on the livability of a city and the property indicators, then Belfast is definitely a city to consider, I'd say. Whereas if you're more interested in the economic health of a certain city, then you might look into a different city. So this concludes the formal presentation. I think before we go into Q&A, I'd like to have a look at the survey results. Chanel, if we could get them up. Okay, so that's not a surprise. The majority of people think that London would be a prime target for residential investment, followed by Manchester and Cambridge. That's interesting. So 23% said Cambridge, which ranked #1. So that's good. Edinburgh, only 5% said Edinburgh. And Edinburgh obviously came second in our ranking, so that might be interesting. Belfast, I assumed that not many people would choose Belfast. But as we've just seen, Belfast has a lot of positive attributes that might actually make it interesting as a potential investment target. So thanks everyone for contributing and for answering the poll question. And I'll probably hand over to Kevin now for Q&A if we have any questions.
We do. Ollie, thanks ever so much for that really detailed presentation. And thank you for everybody who's continued to stay on the video call. There's quite a few of you. We do have some questions that have come in during the presentation. Ollie, I guess the first one would be to you. Great presentation. And how often are you planning on reviewing this? Is this going to be an annual or twice a year sort of report?
So I think the aim is to have it biannually. So obviously the first one will be published next year. So not next year, sorry, next week. So the first half of 2021. And then the goal is to have another update in probably around 6 months' time. It all depends on data availability in the end and how often the data changes. But we think a biannual report would be appropriate.
Okay, Tony, this one's coming for you. Tony, do you deal with any developers in Manchester? And do you have any property for sale in Belfast currently?
Yes. So yes, we have dealt with developers in Manchester previously, and we also are selling a development in Belfast. It's called Portland 88. It's fantastic. I mean, it's right in the middle of the city. It's got great access to all of the amenities that Belfast gives. So yeah, we absolutely do. And in fact, we also have quite a lot of developments in other regions as well, such as in York. A lot of people think that because historically we've done a lot of sales in London, and we've got a lot of buyers in Asia, and they traditionally, many years ago, let's not forget, Colliers has been selling properties in Asia for over 25 years. Historically, we have sold more in London, but I think as the consumer trends change, more people are interested in the regions. We're starting to get more offerings in regions in the UK that's not just London.
Tony, while I have you, there's another question that's coming for you. Are you seeing much interest from B&O buyers out of Hong Kong?
So yeah, so the B&O situation, it's still quite early days, I would say. Certainly, it's only been several months. What we're seeing at the moment is the B&O demographics is very actually different from the clientele that we had from Hong Kong. Traditionally speaking, the clientele from Hong Kong are looking for London. They're also looking for more prime properties for investment. The B&O demographic, again, it's early days, but so far what we're seeing is that the B&O demographic are generally younger. They are looking indeed as owner-occupiers because they want to bring their family here. And their interests are more, they're more interested in livability aspects rather than just investment. So in terms of the demographic changes, we're seeing that the demand is a little bit different. So, you know, we're kind of also trying to capture that kind of market and help a lot of those B&O clients that we have that are coming over from Hong Kong.
Great, thanks, Tony. Ollie, a couple have come in for you. Do we not think that the importance of the UK will be less and less given Brexit? And given the new COVID-19 norms, do we see people moving away from central London and choosing to live in the outskirts, thereby pushing central London prices down? So 2 questions there, Ollie. Do we not think the importance of the UK will be less and less given Brexit? And after COVID, do we think people will be moving out to the outskirts of London, pushing central prices down?
Yeah, thanks for the question. In terms of Brexit, the short answer is no. I don't think so. I think now that Brexit actually happened, I think that's actually adding to confidence, to business and consumer confidence. I think we've been through almost 5 years now of high uncertainty since the vote to leave, multiple extensions and general elections. But I think that political and economic stability has resumed now. I mean, obviously, you know, we're still in the middle of a pandemic, which adds to uncertainty. But you know, the vaccine rollout is working pretty well. I think the UK will still remain very, very attractive to investors because of the stability, also because of the transparency of the market. And you know, London is still the financial center of Europe, and that won't change. Obviously, we're not part of the EU anymore, so trading rules are very different. But I think, you know, the UK also benefits from this because they are now able to negotiate trade deals with other nations independently of the EU. So I don't think that the UK will lose any importance at all. And I think the global weight of capital in total, if we look at commercial property, will probably continue to increase. So people will still look into property. If they want to achieve a certain return, you're not going to buy bonds at the moment. And the bond differential, the yield differential between bonds and property is still very high and will probably remain very high for the future. So I don't think that the UK will become less important. With regards to COVID, that's a bit of it's a tricky question. I think at the moment we are seeing that a lot of people are trying to move out of the city to more rural areas where they have more space. Obviously you won't be going back to the office 5 days a week anymore. So you can probably, you can almost deal with a commute that's maybe an hour and a half if you only have to do it 2 or 3 times a week. So I think more people are moving out of the city at the moment. Will this drive prices in London down? Definitely not. There's still a lack of supply in the city. There might be a little bit of a soft patch that we're going through at the moment, where house prices in the city are not going up as much as in the outskirts. But it also depends on what kind of property you're buying or selling. If you have a multi-million pound property in London and prices are going down at the moment, you're just not selling it, right? So you won't actually see the impact on house prices. I don't think that in the long term that London house prices will fall, just because the city will always remain attractive, especially to the younger generation. I think once we're through the pandemic, a lot of people are probably trying to get back into the city, and so it could be quite the adverse effect. I hope that answers the 2 questions.
Thanks very much, Ollie. I'm going to try and move this around a little bit. We've had some great questions coming in, guys, so thank you. Tony, what is the appetite for Far East investors into the UK property now compared to, say, 5 years ago, in particular from Singapore and Hong Kong?
So in terms of interest, I would say it's higher. I mean, let's not forget that we used to sell properties, Colliers, Hong Kong, and Singapore. We used to sell properties in Australia and Australia, Canada as well. But in the UK has always been the core, particularly because of the historical reasons. Singapore and Hong Kong especially. Hong Kong buyers are more interested in UK because of the familiarity of it, whether it's the buying process, whether it's the legal system, and even language. So there's always been a lot of interest. There's always been a lot of interest from Hong Kong. In mainland China, I would say it's a bit more mixed because the connection with UK obviously is not as strong. So mainland Chinese buyers are looking at more places than just in the UK compared to Hong Kong and Singapore investors. I hope that answers the question. In terms of in the most recent kind of times, again, I go back to the kind of the BNO interests. There are lots of interest, lots of inquiries. The demographics is a bit different. Their demand is a bit different. Their interest in what type of stock, etc. So yeah, I would say there are more inquiries from Hong Kong especially.
That's great. Thanks, Tony. So a few more questions coming in, guys, if you don't mind sticking around a little bit longer. This one's for Ollie. Thanks for the presentation. For a city as large as London, I'm guessing the spider charts for individual areas would vary greatly. Would you have more details with regards to those?
Yeah, no, you're absolutely right. If we look at if we would look at different boroughs within London, you would see very different spider charts. Unfortunately, we didn't do that analysis simply because the data availability at London borough level is very limited. There are some data sets that we can look at. So generally speaking, in terms of economic indicators, they are available at the borough level as well. So GDP growth, unemployment rates, probably inequality. But some of the other ones, it gets a bit tricky to look at the London borough data. I mean, if there's anything in particular that you're interested in, then we can certainly look into that and see what kind of data is available. But yeah, generally speaking, it's tricky to narrow it down even further than that, unfortunately.
Okay, thank you. A couple more questions for you, Ollie. Hi Oliver, I understand that Collier's research paper is based on the 4 pillars, but in the 5 top cities plus Belfast, what would you say is the comparative advantage in each of the cities highlighted? Thanks.
I would say it depends on what city you look at. So obviously the advantage of Belfast is that the property indicators and the livability indicators are pretty high. So, you know, house price growth is pretty strong. There's a high share of renters there. There are a lot of factors that draw people into the city. So that would be for Belfast, for example. Then we've got the likes of Cambridge, where the R&D Pillar outperforms any other city. So they're doing very well with student numbers, the quality of the university, number of business startups. And then again, we have London, or London and Edinburgh, if you like, where the economic health and the economic potential is definitely a comparative advantage compared to other cities. They've got London and Leeds, probably Birmingham, Manchester, where the population is large. You have a large catchment area. You've got a lot of infrastructure improvements in those cities as well. So in Manchester, for example, HS2 will cut the travel time to Birmingham and London in half. So that would be a comparative advantage of Manchester. And without going into too much detail about every single city, so this is pretty much the approach that we took. We look at a single city and then where does it well compare to other cities. Hopefully it gives you a little bit of an idea of why certain cities do well in some indicators and others do well in other indicators.
Okay, thank you, Ollie. There's a couple of questions coming in asking regarding the availability of the report, as it was so detailed. Just to let you know that we will be making this available to all the attendees in the coming days, so you should be getting a copy of that shortly. Another question for Oliver. For Cambridge, why is it lagging in house price growth, given the stronger economic parameters, e.g. earnings, and its draw as the Silicon Fen? Thanks.
Yeah, that's a great question. I think one of the things Cambridge struggles with probably is student retention. So, I mean, obviously you have a lot of students, you have a lot of research facilities and those high-tech businesses. But if you don't want to stay in research or in high-tech, then the likelihood is very high that you probably move away from Cambridge after graduating. So student retention rates are not as high as in other cities such as London and Oxford, for example, where a lot of students actually stay after graduating. And I think that leads to a bit of a supply and demand imbalance, where demand for housing isn't as high as it would be, for example, in London at the moment, or in the outskirts of London, which drives up house price growth. I think that's definitely one of the factors that contributes to relatively muted house price growth.
Okay, another one for you, Ollie. Generally speaking, are house prices in those cities performing in accordance with the research results? What about Reading? This person is surprised that it wasn't on any of your charts.
Yeah, we analyzed Reading as well. I don't have the figures in front of me right now, but I think it's definitely in some of the charts in the report. What was the first part of the question?
Sorry, I've just gone through a couple of the questions. No, generally speaking, are house prices in those cities performing in accordance with the research results? And what about Reading? This person's surprised that it's not on any of those charts.
Yeah, according to the research results. I'm not entirely sure what that means, but what I would say is that I think house price growth, you know, in the last few months was probably quite volatile, obviously. You know, a lot of people try to move house. And, you know, we've seen in the UK that house price growth hit multi-year highs in the last few months. It's now coming down a little bit. Was that to be expected? Yes, I think so. You know, we had a lot of government support schemes that were driving up house prices. So we had the stamp duty extension, which again is now extended again until later in the year. And we also now have the introduction of 95% LTV mortgages, you know, guarantee scheme from the government, which is designed to boost housing activity again. And we also must not forget that there's still a massive shortage of available housing stock. So there's still quite a large discrepancy between supply and demand. I think the government aims to build around 300,000 homes a year, and we're not there yet. So I think that's one of the underlying factors why we at least expect that house price growth will continue to remain positive in the coming years because of this supply and demand imbalance, plus those government support schemes to stimulate the housing market.
Great, thanks, Ollie. A couple more questions before we wrap up. Tony, what other residential services do you offer, land, etc.?
So in terms of the whole of resident, I presume the question is asking for the for residential. So the residential department is a full service department. So we have services all the way from land acquisition and disposal, all the way to institutional investors who buys and sells, manages buildings for residential built to rent. And then we have new homes, international properties that sells individual units across the world. These are the services that we have. I'm not sure if that answers the question, or what other services they're looking for.
It was just what other residential services do we offer? So I think you've covered it between land,
okay,
build, rent, etc. Okay. Thank you. Two more for Ollie, and then I think we're done. Manchester prices have gone up substantially in the past few years, to the extent where city centre properties are almost unaffordable for many. Do you still see much potential for city centre Manchester properties?
I think so, yes. I think what I mentioned earlier was that obviously at the moment a lot of people are moving out of the city, but I think this trend will reverse again over the coming years. I think that people will be drawn back into the city centres, not just London, but also the likes of Manchester. I think also, the interesting thing about Manchester, I mentioned that as well, as the HS2 link. So if, even if you live in Manchester, but you work in Birmingham or London, your commuting time will be cut in half of the coming years, which makes it a lot more attractive to actually move to the city like that. And city centre affordability is always an issue, and it will remain an issue. But I think that, again, the demand for those specific properties will still remain high, and that will probably drive up prices even further. So there's definitely a lot of potential, I'd say, for city centres, not just in Manchester, but across the UK.
Thanks, Ollie. And we have our last two questions, which I'll try and combine because they're quite similar. Do you have any information on the amount of new builds coming onto the market, say in the next couple of years, in the various cities on your list?
We do have access to official statistics on new builds. Do we have city-specific lists of new builds? I think we would have to check with the wider residential team. It's obviously different service lines within the residential department. So if you leave your email address or email one of us, we can definitely get back to you on that one. We would just have to double check what's available.
Okay, thanks, Ollie. And the last question, what would Collier's advice be, the ranking of the highlighted top cities for property developers, bearing in mind availability of sites and construction costs?
That's a very good question. And what I would say at first is, I think those are things that we could definitely discuss in more detail. Obviously, the report tries to combine, a lot of different indicators across many, many different cities. And it's quite difficult to completely understand what this all means. And, what it doesn't mean is that the top 5 cities are the only cities that you should look at from a developer's point of view, and you can just ignore all of the other cities. I think what we tried to do with this research was more to identify strengths and weaknesses of the cities that we've analysed. So I wouldn't say, put all of your money in Cambridge, but don't look at York, for example. I think one of the questions was, who was number 6? That was York, actually. So I think it's more to provide, as I said, an overview of the cities. Where do they do well? Where could they improve? And that should hopefully then lead to some interesting conversations and discussions. And what I would also like to say is that, if there are any questions that anyone has had, or any questions that are coming up in the next few days or weeks, or once you've had a look at the report, which we will distribute probably by the end of this week or early next week, just feel free to reach out to any of us. I'm happy to discuss any results in more detail. I'm happy to discuss a specific city, a specific indicator. Anything that comes up, feel free to just get in touch with us, because I know it's just limited time now, and there was a lot of material I went through. I'm aware of that. So yeah, any questions, feel free to get in touch.
Ollie, Tony, that's great. We'd just like to thank everybody who's joined us on the presentation today. And as Ollie said, if you do have any questions, please reach out to us. We're the International Properties team, or reach out to Oliver directly, and we'd be delighted to be able to address any further questions that you may have. But that concludes our presentation today. I hope you've enjoyed it, and we look forward to seeing you on the next one.